Afternoon all. This is Fadi Hemzi. It's 4:44 p.m. on Wednesday, 15th of February, 2023. Welcome all. We're starting a little bit early because I had a conflict I didn't even know I was aware of it. It's been a tough week or so. We've had two hardware issues, and of course, one of them was a machine that was being repaired. It comes back and it's having issues keeping up with the orders. It turns out while it was there, that asked for my password to check the windows, and now the window, especially 11, it gives you one drive back, even though you blocked it. So one drive was added back in, which, as you know, is a cloud. It's a no-no. You cannot trade with that. If I go to that, you could see this DOM that's moving back and forth will get into trouble because trying to write to cloud as prices are coming in, you're executing orders, the orders go out, orders come back, get updated on your DOM. And I am a DOM trader in futures. It's very fast, very easy to manage where you are, but it slows down everything. And then it got to a point where it would freeze. Twice I got frozen. One time I got a margin call, not because I wasn't that close to the margin level, but I have a tendency to clear my deck on the DOM and redo my colors, which is if I'm long, sell stops and sell limits. Sell stops underneath, sell limits above. You color it so you know this is your risk reward. And especially if it's a trading stop, your risk reward really goes your way. As it goes up, it lifts it. It can't get worse. But as it goes up, also you see your P&L changing in your favor versus where you were before. Not that it's going to be positive all the time, but at least the delta from where you were, where is it now, is going to improve, and your risk is reduced. So all in all, it's a very, very easy, hands-off risk management. All you need to do is just take a decent stop. I usually use ATR. So again, I'm not choosing it. I'm not getting emotional. I let the market tell me average through range. Maybe one and a half times of that. No more than that and no less than that. Okay? Yeah. If the ATR drops like 7 or 8, I don't even trade. Because I got to run that. In Qs, you want to at least 10 handle, maybe to 20. So if the ATR drops, it's not worth trading. There's no update. I mean, there's no really much gain. Definitely the only person who's going to gain is your broker. The broker is going to love you. Definitely going to get their commission. Who knows what you're going to make? So I don't do that. If it goes too high up, now it becomes very, very randomized return. And sometimes happen at the open, you have fast markets, and pretty good chance you're going to get overrun. But somewhere between is good. You put it on there, trailing stop, and you let it go. Well, we had that problem. So we start looking at what's going on, what's wrong, and talking with TradeStation. I brought them in on. It's repeated on one machine on Friday, on two machines on Thursday before. By Monday, I had a high tier TradeStation support guy come in. Not the ones who answer the phone when you call them. No, these they come in like by appointment. They came in, take a look at it. They spend an hour here, and they said most likely it's one drive. Take it out. Well, probably we're having a hard time taking it out. It leaves remnants in what's called registry. And that's brain surgery. You really have to be careful. I don't recommend you guys touching your registry. I only do it with somebody else present. One mistake, you're going to lose your drive. You won't be able to boot it. Your manufacturer can. You got to send the drive in to with a machine to reset it through BIOS, low-level formatting, a whole rigmarole, which is that's not what we want. We're traders. We're not hardware manufacturers or repairers. So it's been a tough couple of days like that. Now I bought this machine. This machine took me 6 installs to get it clean. It was, of course, this is my front end, so I have something like 25 different applications on it. Other machines are simple. I have a browser to log into TradeStation to download a file. Look at the margin requirements. Look at the holiday schedule. That's it. And the rest of it is background where TradeStation itself gets the data. All that is a fast communication throughput through the router. This is different. This machine talks to the outside. issues codes, does marketing, does webinars. We do emails. It does a lot of what ifs on Excel. It's a brain behind the operation. Well, that's something like 30 applications. Now, there's an option they give you when you go to reset. I mean, every once in a while it's good to reset your machine. There's nothing wrong with that. If you rejuvenate your hardware. But if you go to here and I'm not going to do it. I'm just going to show it to you. You go to updates. There's advanced operation. It's called recovery. Okay, and you click that. Reset this out. You go through here. There are a few questions you got to answer, but we got to be careful. It's good. And I like to wipe out the drive, start from scratch. There's simpler solutions like we'll keep your apps and we'll bring it back. I don't like it because if there's a problem on your operating system, like there's some files have been corrupted over, let's say, a year of operation, that's not going to go away. You really need to install it fresh, and you need to install the apps on it fresh. So I took the drive D and copied all my data out, made a list. The whole checklist was on Friday. Okay, couldn't make it. The last working Windows 11 that work was last night. So I'm a little bit behind. I apologize for that. Long story short, watch for OneDrive. You don't need it on. Or now I understand there's a pause control on that. There's a syncing stuff on that if you get it. Now, we assume the problem is that we can't get rid of it. It keeps on coming back. Why? That option is no longer available on Windows 11. What used to be when you started, it asked you, do you want OneDrive or not? We would say no. Now it brings it in. And taking it out is where the problem starts. Okay, so my suggestion is use the app down here. Go to the sync pause it and let it update like at nighttime, once a day, not during daytime, because like at the rate I trade, disaster. It's trying to write to the drive, but we need the bandwidth for placing orders, and on the receiving end, we want to get the data and the CME telling us what our positions are. Net. It was like massive, chaos. And on Thursday, they put one of my accounts on LTO. I've never been on LTO before. I didn't even know what it was. Liquidating trades only. And what was that? Oh, I said, I'm not on margin call. No, you weren't. But you were having too many orders there. I said, you schmucks. If there was a problem on that, no. Well, we couldn't figure out what your risk was. So we put you on liquidating trades only. And guess what? On the way down, I took a, if it goes against me, I don't let it hit my stops. What I do is actually reduce size immediately. That means I exit now. Much more efficient than the stop. The stop is 25 handle. You jump out at 5 or 10, you still ahead of the ball game. And then it gives you a chance to come back if it rotates and go that way. Well, because they put me on LTO, on the rotation, I couldn't get back in. Yeah, I didn't know what it was. I didn't find out until Friday what LTO was. So be careful out there. It's treacherous. This market is wild, and volumes are huge. You could see how things will move even outside of the days you expect. Let's say FOMC or non-farm. It just moves. So it's been a little bit tough few days. Now I'm also trying to. I declared to one of my staff, I said, I'm going to have white man hours. I'm no longer going to be working 2-3 shifts a day. I just can't. I'm not 22 anymore. So I want to go to bed at 9 and be up early and be able to watch the news and have a coffee rather than rush. It's just too much. And this whole weekend, I saw 2 minutes of Super Bowl. Still is on DVR. And the folks I was supposed to be at, they've been screaming at me like, what happened? You put a bet on the show up? I said, yeah, it was only $30. Was it squares? I said, I was just participating. But yeah, I didn't. I couldn't. Shoot me. What am I going to do? When you're dedicated to your work, your priority is the system, priority is support to others, and we're in transition. We got 4.9 already for ORB. I'm going to give you a little update on that. And here's the whole write-up on the ORB. And we're about to introduce 5.0, which is called order tickets. Okay? We actually got too far. Now I know on January 24th. You could see the process. It takes a while to get there. There's a lot of back testings involved. Nothing is quick. You cannot throw a switch. But by 5.0, we'll be in what's called order tickets and data providers. That means we're not using API from TradeStation. That means we're not relying on TradeStation for the execution. We're going to handle it ourselves. That means we're not going to use the category called strategy and indicator and authentication. All of it would be one file, which would be an indicator class, whatever, all of it on the inside. Because we can't go through strategies. Can't handle. We are running 2 system houses in Chicago using our code, and simply we have too many people. And without converting to this mode, we will have more big swing days. Okay, and so because we're getting partial fills and partial stops, it was really it's mind-boggling. And we've started this journey about little bit at 4.8. A little bit after November 15 minutes, we had a problem. I think by Thanksgiving, we had made up our mind. By the week, about 10 days after that, we knew we're the wrong spots. So we scratched 4.8, and but we had to go. First, we do that. We have to write log files. Trade Manager does not tell you what you need. All the stuff they give you is for kids. So I'm sorry to say that, but I'll say it loud. I'll say it on CNBC. What they give you is for kids. We have to write a log routine which was 4.85. Start making a log so we know what is causing these problems first. Once you decipher the logs, we went immediately to 4.87, which we took the inter-bar order generation out, and we tightened up on the log files, a little bit bigger. And then by 24th of January, we had a production release, which I call a Band-Aid, for a Band-Aid between 4.9 migration to 5.0x. Okay, we are about 2 weeks away. Nothing to report on that yet, and I gotta learn it myself. So please don't ask me to want to be beta testing it right now. That's not even close. But I think sometime in early March we'll be beta testing for that. I will assure you, we're trading edge contract right now. When we get to M, we will be trading the somewhere in M contract. We'll be trading the order tickets, and that's 5.0. And it would then 5.1 will have also ES, and we'll have crude. So we'll be multi-asset. A hedge fund has requested that. We said fine. That's not a bad idea actually. So it should be more have more tools available. Okay, that's where we've been stuck. This is our issue, and just been really time consuming. Aside from that, PMT we got stopped out, but it went our way to the downside. We're still short. I'm going to go over that. A couple of our option trades worked, a couple of them didn't. Nancy had a surgery last week. She's back this week, back in South Carolina. She was at Emory in Atlanta. She should be fine. She wants to jump in and trade. We told him to take some time off. Cash is sitting in for her, and they're communicating, and he's holding down the fort. As always, Peter is doing a great job in the room, and so on and so forth. So we're getting back on the horse. I'm settled here. Work is good, and I'm enjoying my new house, but little by little, everything has a time and place. With that said, let's move on quickly to Econ calendar. Okay, tomorrow is a big day. We talked about it today in the chat room because we got housing starts more than anything else. You have Thursdays, you have a jobless claims, but also you got PPI, and you have Philly Fed, which is Mid-Atlantic environment. The GDP there, local GDP for Mid-Atlantic. So very crucial. Let's just go through what matters. Nothing that big on Friday, in my opinion. Tomorrow is it. It's going to be early. It's going to be at 8:30. So if you guys are trade with us, you're going to come in early. By the way, if you're part of our package and come in, please realize we're CFTC and SEC compliant chat room. That means you need to use first and last name. We had a fellow today that would not tell us what his last name is. We don't have anybody with that first name, and so we kicked him out. We don't try to do that. We're trying to be polite, but all we ask you is to have it's a tango. Stick to the dance. Do a little dance with us. Tell us a little bit about yourself. You would have. I hit the eject button. Okay, housing is such, as you know, especially down here, an issue too. It's been under pressure price wise, and now with the builders are really monitoring the builders to see are they. Actually, there was a number today, I think, or the day before, has to do with uh what's the traffic looks like. People coming in to start up, get into contract to build, lock up existing uh, housing project that's being finished, and also and how long it's on the market, how many days. So this is all under focus now. It's a key because the economy runs really on two items: housing and auto. And both of them now are full of chips, chips, and chips. So because we have automated homes, and now you have, of course, highly automated cars. So both of those are crucial. Both have had some setbacks. Plus, you add to that our dear friends over at the Temple, better known as the Fed, Jerry Powell and company, with their interest rates. There's been an issue, a headwind. Last job numbers were very strong, beyond anybody expected. Yes, the unemployment number dropped to some crazy number of years back in I think 69 or something. But the point is that's available people willing to work. Yeah. So it's a survey issue. But nonetheless, housing is under focus. 1.382 as prior. Here's your consensus, and that's a pretty wide range, by the way. So we'll see how that goes. And also, I would look at permits too. So these two numbers you want to look at tomorrow early. Jobless claims, I'm not worried. It's the normal 200,000 plus minus. Hasn't really seen, even with the layoffs from the Silicon Valley, hasn't picked up. Philly Fed, that tells us what's happening in Mid-Atlantic, which is the manufacturing base. Kind of the end of a rust belt, if you will, before it hits the ocean. Philly Fed, oh wow. Look at that, how negative that is. Yeah. Oh shoot. Okay. This is going to be interesting tomorrow. Yeah. I mean, I look at this every month, but I've never seen this negative. At least I don't recall, Senator. Yeah, I don't recall. And then, of course, we have PPI. PPI, this and the CPI got to go together. CPI was here on Tuesday, wasn't it? Or was it? Yeah, it came in Tuesday. Yeah, it came in Tuesday. That's right. Okay, sorry. Let's go to PPI. Now remember, this we seeded early, as we discussed. The fellow who wrote the first chapter of my book, Jeff DeGraff, he actually had a video midsummer saying, "Watch out for PPI. PPI is going to give the first clue." So again, because this is a producers index, and there's also another thing that I think Cash brought to my attention was the shrinkage. Not in order not to pass on all the pressure that's on the producers, the commercials, they are reducing some of their sizing, which creates a havoc in the surveys. Okay, and they really need to do this properly. I don't think it is, but there's no doc. It's too wild, too many factors where they're reducing the size of each item in a sample size in terms of size of the. Let's say you're ordering a fillet at Capital Good. You used to get 8 ounce. Well, you can't find it 8 ounce now. Price is a little bit higher, and they give you 6 ounce. Okay, that's called shrinkage. So because they're trying to reduce what's passed on, and then what gets passed on becomes CPI. So the inflation is much higher in both categories. We just don't know it, or we don't. They don't come to our face and tell us that in our face. So they're trying to ease the pain. Yeah, but it's not. It's difficult out there. I look at it. What do you call it? Tank of gasoline. I look at $100. How many bags do you get of food you get at Whole Food? I've been running this for years in my head, and right now it's going back up again on the gas and dropping in terms of items. And now it's like it's like a 3/4 of a bag, maybe less than that, 60% of a bag now. Just a regular sample of what you usually normally order from like Whole Food you buy. Not going crazy with the meat and like a steak or lobster, but just regular stuff that you buy, milk, uh, chips, yogurt, that kind of stuff, the staple. And yeah, it is upticking. Look at eggs, so on. So we'll see how they're gonna tell us, what they're gonna tell us tomorrow, and want us to believe, but I don't. I think it's much higher. And I still think the rates are low. That means that I think we have free money. I mean, if you take it inflation adjusted, look at tips. If you got inflation adjusted rates, I still will not charging the real interest rates. They're nominal, and actually the real is negative. So, which is not good. Long term, we got to raise that. We got to have some respect for net savers. We're not doing it, and that's going to be a problem long term. And everyone's going to walk around with their public, or what's the other one? Robinhood trading. Some people do not belong to trading. Okay, they don't. So trading should be risk money only. That's the money that you can lose. People don't understand it. Okay, Exxon Energy 0.3 versus 1. That's 5. Wow, yeah. I think this month to month is going to be a problem tomorrow. We'll see. Yeah, you see that? Yeah, so we'll see. Okay, that's for this week. Next week is expiration. Week after that is GDP and so forth. But we'll get there. Next week's going to be pretty low on news because of expiration. 1 second, I'm sorry. Sorry, I'm back. It was getting cold. I'm sneezing. It was cold. Uh, yeah, so. 1 second. Hold on. So I'll answer that later. Yeah, I don't know why. A couple of my friends, they always text me. They're traders. Middle of the webinars. I don't get it. So I'll answer it later. As Tony Montana said, I'm going to put him on ice. Yeah, exactly. All right, market timing. Okay. We were doing okay. It pulled back, bounced up, outside bar up yesterday, kind of. Then we ride again. So we're short from 4070, 4070. So we're up. We're behind about 70 handles. I still think it's a short, but somewhere here I gotta stop it and then short it again at a different level. We did got fairly close to that level on the downside. This is 81. Intraday, that was, you see that 60, 4060. So, but remember, we can't close a position in the middle of the day with time to digest. Only close to close. That's how the protocol is. Believe it or not, they're still operating. They still respond to my email, but they're not publishing anything. Nonetheless, I've kept my protocol. We update the chart to go forward. Sigma levels, we're at 1. This was above 2. So, there was some divergence there, kind of. Okay, you gotta look hard. It's a weak one, but still was heading south. I think still we are. So we'll see. Market is getting tougher and tougher to call. Not easy. Sometimes it's easy. Sometimes it's not. If you keep the texture the same, somebody like you or me will corner the market. Doesn't work. Okay. Look at this. This is a huge ceiling there on down. Cannot get through this area. So, and to me, acceptance said, or volume profile says, probably the path of least resistance is south, not north. Now, the countervailing argument is transportation. No, we're going to go a little bit higher. We'll see. Okay, but again, it's another weak high. If it turns around here, because you're going to get a lower high, most likely, again, you're going to have a challenge of the 14.9 and then maybe 50 bar and the 200 bar. But for now, we have a little bit push upside. The CI is at 18, so kind of extended. As far as Russell is concerned, it's found some support here. Again, this is for NDX, this is for SPX. So transfer for STX, SPX, Russell for NDX. All right, these are our detrenders. We're 8 out of 8, all positive. And usually, this is the prerequisite for a move down. It doesn't mean it's tomorrow. It doesn't mean it's imminent. But you can't go down until you get all 8 up. So at least that check it qualifies for that. Now, if they buy this breakout here, then the short is, short is not a good story. But we'll see. I just don't know. It's one of those times I don't know. We're at a sell on the daily and long on the weekly. Okay, this I buy. This where it came from, I don't know. There's a trend following, obviously, but it's a couple of components that that's it. We're on the short side. We were dropping here, but then we're coming back at that. The last couple of days were very different, but we'll see. We're at 1 sigma now, and we're barely even. Now, Momo says, being at 0, neutral, no call here. Doesn't know. It can go either way, so be careful. Be careful on your bet size. And we're at +1 here, on almost +1 on the SP1. As far as activity here, our peak was already in. Okay, and usually these peaks, that's still low. If I get to around 140 above, 140, 140, 160, that's topping environment, but we're not there, not even close. This peak up here was 18, the other one was 35. Yeah, nothing yet. So again, no evidence to point to us which way it's gonna go. So what do? Shrink your bet size. You have to. Unless you're doing index futures and you did momentarily. That means that you could see the momentum continuing. You're there for a few minutes, but nothing overnight. There's no clue here overnight what's going to happen. Each day is random. Now, big move down on the vols. We were at 3 sigma. Look where it stopped. Now we're at 1. So all of a sudden, everything is hunky dory. I don't know. I don't think so. But that's where we are. That's not because I'm short. No, I'm short for different reasons. I'm short because I think we have another leg down. So I'm trying to get ahead of it. And I'm probably going to have 1 or 2 trades that are going to be bad. But they're small. It's the push down that will be helpful. Part of that also is the skirmish on the debt ceiling. Okay. And that's going to put a shake in the market. But things are quiet on the Western Front. Everything is good. As I call it, Midwestern Front because of Chicago here. The bond futures are all quiet on Midwestern Front. SQ. Okay, this is, I don't know if this is today. Yeah, I don't know because we started early. No, that is today. Hallelujah. Okay, we're trading at 121, which is below center line for median of the price range from 110 to 170. That's 140. We're actually in the first quartile. Okay, so absolutely no signal. For those of you who are students of SQ, like Peter Cook is in our chat room, you could see how this stuff has helped all of us to be in the right shape, the right side, and understand the shape of the data. We need much higher readings. Nothing in here. Basically, there's no bet by the big guys on the downside. That doesn't mean they're right. These are the guys who thought that we wouldn't have debacles that we had in 2008 either. Okay, I'm talking about IE, Morgan Stanley, Goldman Sachs, the white shoe balls bracket banks. They got caught. So they're the smartest and brightest, best and the brightest. Okay, out there, and they still got caught. So they're gonna make mistakes. We're all gonna make some mistakes along the way. Nothing is perfect, but for now, SQ says they have no downside tail risk trade on. Okay, that I have not bought any puts to the downside. 1 second, guys. 1 second. I'm sneezing again. This is I fell asleep on the floater in the pool, and I got breezy. That's how I woke up actually. So let's see. SPX. Okay, no, okay. Oh, this is wrong. Murray, this is wrong. Hold on. 37. Where's my volume today? What time is it? 5:14. Oh, they reset this. Yes, but oh no, we rolled it already. I think we rolled it. Let me double check. Oh, it should have. Make sure we're right. Otherwise, the numbers, the analysis is wrong. Yes, we're correct. Feb and May. Right. Is it Feb? No. We gotta roll. Sorry, guys. Sorry, Jack. My bad. Sorry. This should be H. Long H and short M. So long March, short June. Okay. My bad. Yeah. Actually, we talked about that last time, and we said we should do that, and that's true. Well, we did it. My bad. Again, I have no access to this machine. This machine actually got humming, part of it, not all of it, last night. And today we spent some time validating it through testing that it's working fine. Okay, now let me save that. Oh, let's take this out. Okay, there we go. So we're long H, short M. That's the 3 months. Let me just save it first. I'm too worried about losing work. Yeah. So, okay. So 1.97. All right. It's in the sigma level between negative 1, negative 2, heading south. This is 30 minutes. It's neutral. No value here. Remember, just both legs are real time. Neutral. No value here. If it was high up, then market would be much lower, coming near the lows. Or not. The fact is, low here is actually reaching to a high. We're approaching to a potentially high, so be careful. Stock car side, one leg is already down. That's these two tell me there's a rendezvous point down here. SP2 says, hold on, not so fast. So internals are pointing to the south. SP2, which is kind of a little bit of internals in it, but it's very focused. It's a very small area, very specialty. It says, hey, I'm a little bit up now. Again, but being around 50, this is also neutral. It doesn't know. It's not for sure a sell or for sure a buy. Again, coin toss. Okay. I haven't posted these. I know a couple of people talked about it on Twitter. We lost our tweet deck. The tweet deck is not coming back online. Remember how tweet deck used to be? It's not so. For me to manage it, I have to figure out how the new one is. I know they were releasing a new one as impacted it. We used to post these over there by Tico on his account. Anyhow, no big readings here. No plus 90 or 90s, up to negative 90. Other than this little bit of work there. Again, no signal. Again, neutral. You can't. It's a non-conforming. Let me put that. Okay. Here's the long on ES. Again, this is Larry's buying power index. Long, short, long. Wow, this is a big long. And another big long. So 3 out of the 4 are long. So Russell, NASDAQ, they're going together. That makes sense. SPX, major market index, the 80% of US equities. Then EMD, which is mid cap, is on the short side. So predominantly saying long, not short. Okay. Is there anything else I need to go there? No. Last but not least is our chart here. Oh, what happened to that? Murray, what did you do? Okay. So let me go there and open this up and do this. Okay, see what it is. Hold on. Let me size it up quickly. Okay, now we pulled back. Remember before we talked about it, I think we were a little bit after that point last week. I don't remember right. Actually, seriously, it's been a blur. The two lines, I always talk about separation of the two lines. They are in the positive slope, both. We're below 75 area. It's not in a warning area where I get into warnings like 85 to 95. You really don't see much after 95, but this is the area where it gets saturated, overbought, but not there yet. Okay, so the data now is that 15? Yeah, that's data. No, that's the 15. Yeah, that's refreshed. Yeah, and again, one suggestion is that when you remind yourself, go here and go do 3 years. I'm saying 5 years. To update, get it this way. Okay, now you really get a better range of the feel for the range of that's involved, and you could see that it's again no kind of no signal, maybe slightly positive. That's it. It still hasn't gotten oversaturated, and of course last time it wasn't the big sell-off either. But these are notable times. I mean, heck, this was COVID, and this was the budget shutdown, as you know. Anyhow, that's my spiel. Preponderance of evidence says if you add everything up, uh, be careful. No conviction either way. It's kind of uppish, but there's no solid pressure behind it. That's why we get these big swings. Of course, you see it also in the text, the FANG. Look at what they're doing with Tesla up and down. Look what they're doing with Google, so on and so forth. So I would be careful. Okay. Any questions for me? Again, to recap, we started a little bit early. I had a time conflict I was not aware of until I got back here, and so I appreciate those of you working with me on that. We have to get at 5 o'clock next week, next Wednesday. Okay. You mentioned one of the possibilities. Yes, 3,200 down. Okay, good question. That was before. Yes, Michael. I remember that the session that you were in. Yeah. Well, we're not pointing that way, and that's more than 10% away. More than that. More than almost 30% away from here, right? For 32, that's 900 points. 900 points is about 30% of this, approximately. That's back of envelope. So the question that Michael has, and he's been with us for years and years, very good one. You mentioned once the possibility of 3,200. Is that at this point it is? Especially when you see in a skew, there's no participation by big boys by getting to tail risk down there. 3,200 would be down here, right? And this tells me there's no interest. Okay. Now, is it like we may have a more extended localization? It could be possible. We have an extended narrow consolidation rather than a sharp decline. I add the word sharp. Yes, could be. Yeah, it could be. Or the other side of it, that's why the market is nervous. Okay, people don't realize this market is very nervous. Is that all of this is nice and hunky dory, and what happens if Putin drops a dirty bomb because it's back against the wall around the anniversary of the the 24th of February. Who knows? Or thereafter, and then all these assumptions we have throw it out the window. But right now, as we have the data, as we have the news, as we have the Fed sentiment, as we have the economic data, well, first data I meant trade data, the market thinks we're okay. We just have a little bit of bump and it'll go away. I don't know how it's going to resolve. Nobody knows. If I knew, I wouldn't be here. But the data, again, right now supports no move toward 3,200. Exogenous news notwithstanding. Is that clear, Michael? Does that make sense? I'm just going with what I know and what I read and what a few other hedges I talk to, and I don't have to see. And these guys are a lot smarter than I am. I haven't seen them talk about 3,200. So. Hey, Peter, how are you? Hi, Juliet. Hi, Jerry. You're quite welcome, sir. Anybody else? Any other? Hi, Dennis. How are you? Anybody else having a question for me in that realm? There's a market timing, so forth. Again, we're trading NQs. Okay, intraday, couple hours. I'm really, if you come to the chat room, you'll see I'm really picking my spots. I'm not coming in the morning and say, I got to jump in. I mean, today I think my first trade was like 10:40. I traded for half an hour, maybe 45 minutes, tops. I was done. So, uh, I'm sorry, I took a break. I came back. But total time in the market, it was around half an hour to 45 minutes total. Why? There were a couple of intense periods. Okay. And the moment was dying, I'm out. Because if it dies, it could go sideways for the rest of the day. We don't have a lot going on. So pick your spots, as they say in the stock business. You got to be a stock picker. In the futures right now, you got to be a time picker. Pick your spots. Look at what you see, and if you're wrong, get out. Don't sit there. Because volume is a little bit lower. Also, I think you're going to get a more directional move. That becomes dangerous. I mean, I traded longs only today. Yesterday I traded some shorts, but today was some longs. I did not trade. I did not trade on. Sorry, I did not trade on Monday because of a system issue. But very vehemently, you couldn't go near it. But yesterday I had a couple of shorts that worked fine. And then there was a one long that I had to jump out before it hit my stop and then go back in, and then it worked. Today I only played longs. I only traded 3 longs, 3 setups. Yeah. So anywhere between 10 to 12 minutes each, maybe a little bit less, maybe a little bit more. Total time in the market was under 45 minutes. And I was afraid to re-engage because the setups were not clear. There was a lot of wishy-washy stuff. So that reflects the market. So, any other questions for me? Hope you all had a good Valentine's Day. We'll keep you posted on the ORB. We have issued warnings to reduce size because because we're getting ready for 5.0, tremendous work involved in what's called benchmarking ahead of it. I'm just being selfish, saying, listen, I got to be fresh, I got to be focused. I can't have people getting kicked around, coming to me with emails on this. What do I do? The simple routine is simple. Don't trade. Just wait. Give us a week. Give me 2 weeks. Let me do the right thing with 5.0, and you'll be pleased. Rather than getting battered around on 4.9 for some reason or another. Not because the code has changed. Code has not changed. Okay? Matter of fact, our parameters have not changed much since 4.7. It's all the order handling because of size. We got too successful. We became victim of our own success. Too many people came in, saturated it on an asset that's not very liquid compared to, let's say, to ES. NQ is not. Worse than that is Russell. But because of that, we are urging people trade one unit, which is 3 contracts, or don't trade. Just give us a week or two, because I got tired of all the, especially friends or family, which just all started on automation part, saying, "Hey, what do I do now?" I said, step back. We're doing a better job on the order handling. Also, let this market get a little bit more steady, steady up or steady down. Right now, it's a little bit wild intraday. So, you have a candy set, you ask. Okay, I got it. No roses? Oh, roses have a short life. I see. Well, don't forget chocolate. Yeah, exactly. Yeah, last night, Bitico, we had to go. I was in an accident Friday. I'm okay, but the car isn't, and it was just a rear driver's side mirror. But he went to a shock. It was really bad, so it was a truck again. Poor kid has been with me in 2 accidents. Both times we've been hit by a truck. And this time we were moving for like 2 miles, 3 miles. We're coming to a stop. The other time we were full zero stop. But that was the rear end. That was bad. This was a side hit. But so last night we finally, the other side finally folded. Because I told him, listen, you want to argue, go and argue. I'm the wrong guy to argue. Firepower will come after you, and I'll fix you. Okay, but don't tell me about laws of physics and all that. The kid was telling me what kind of laws are involved in Florida, and I shouldn't worry about it and all that. I said, listen, you hit me, we're gonna come after you. They folded yesterday morning after a day of playing games. But then I had to go and pick up a car because Tico is sick, and with a rear left hand view mirror gone, it's illegal in Florida to drive. So I can't be tagged or stopped if I'm in an emergency to respond to Tico. So we went to pick up the car at the loaner, and we were near Whole Foods. We went there. The whole place is Valentine's stuff. And talk about candies. They had a lot. This is like 6 o'clock at night. Between candies, chocolate, and roses, holy mackerel. They probably have a lot of stuff that got thrown away today. So, anyhow, we did nothing. So, we came home. I made him a burger, and he loved it. So, all right, guys, we'll see you soon. Thanks for attending. As always, this gets posted. It is now. Again, TweetDeck is not working properly because Elon Musk said he's going to update it, but I think it's not what it used to be. But at least Twitter itself does. So we posted there. As always, first we posted on our YouTube channel, which is here. Okay, we're just going to add it here, and then from this we copy to Twitter, LinkedIn, and Facebook, just because of our sample population reached some of those, and they come and take a look. Best thing is to do to subscribe. Go from your YouTube, subscribe to us, so the moment it's posted, actually before we get a chance to finish it, you get an email saying there's another video from us. Okay, now I'm going to do one on Orb, and my goal was to do it last week. That's history. We'll probably do one on 4.9 to kind of box it, kind of package it and say, listen, this is our release copy. This is our benchmark before we go to 5.0. And then we're going to do a couple of extensive webinars on 5.0. Because 5.0 is a different animal. As a matter of fact, 5.0 will trade multi-assets and also do risk management. It won't allow you to trade as much as you want. It won't. Why? We want you in the game. We want you to stay in the game. Yeah. So it actually will look at your cash balance internally and gives you certain parameters that you can go up to but not more. Not trying to tell you how you should trade, but we don't want people going out there and having a good couple of weeks, then betting their farm. And one trade, they get wiped out. That's typically what happens. So keep it small. Today, I was trading about, I'd say about I think I was too much trading. I was trading about 20 to about 25% of the firepower. I usually go a little bit above that, but not today. Sometimes I'm below that. Depends what they have, how much time I have. But totality of it was, it's much not. Of course, the base gets bigger, so the percentage is still good firepower. But you gotta keep it small, your bet size, because you don't want to get nervous. Once you get nervous, you're not seeing the chart in front of you. Okay, and I'm an order flow guy, so I'm looking at the chart on one side, one eye. The other eye is really on the dome, because I read the tape, but for futures, which is a dome, depth of the market, the trade session calls it matrix, because then I know from that pattern what should be coming, and whether do I gun it up for a few seconds or a few minutes, okay, or stay very small. Let's stay small. You can't go wrong with staying small. You can actually think. But if you're gunning it, you got to have it in your head, a plan. Where I'm going to gun it, where I'm going to get out, and so forth. So then I'm searching on the screens with my left eye where those areas going to be while I'm watching the order flow. If they do show up, there's a confluence that I go. Otherwise, I don't. So please bet small. We're going through a lot of changes out there. And I think most people, most players in the market don't know what to expect. That's why you have all these surprises. Just look at NASDAQ. NASDAQ has been wild. Okay. Thanks for attending. We'll see you next week, same time, 5 p.m. on Wednesday. And again, on the website, the link is posted. You sign up only once, it repeats for you. To remind you. Thank you all. Good night.